So let's quickly review the procedures for preparing a bank rec. These are great procedures that you need to follow. I'm going to walk you through each one of them, and then we're going to look at an example of a bank rec. The first thing says, here's the procedures when you're doing. Obtain the month-end bank statement. You can't do a bank rec without the bank statement. Now remember, the bank is going to issue you a statement. It's going to have information on that, and the statement is going to have your deposits, which are generally known as credits. And it's going to have your withdrawals, which are generally known as debits. Don't that sound like something to you? It sounds like an income statement. So when you read your bank statement, think of it as an income statement. Any credit to it is an increase in the cash balance per the bank. Any debit to it is a decrease in the cash balance per the bank, because they look at it, and you should view it as a bank statement. So a bank credit memo means you're increasing cash on the bank statement. A bank debit memo means you are decreasing the cash balance per the bank statement. So start out with that. Obtain the month-end unadjusted cash balance on your books. Determine if there are any deposit in transit on your books versus the bank. So what you're going to do here is you're going to say, are there any deposits that I recorded on my books that the bank doesn't show? Are there any checks that I recorded on my books that the bank doesn't show? Determine any credit memorandum. So a credit memorandum is a credit memo on your bank statement that the bank collected something that they credited your account for. The bank must have got some money that they credited your account for that you have not reflected on your books. That's called a credit memo. All right? Credit memos increase the cash balance for items such as bank collections on behalf of the company. Determine if there's any debit memorandums such as service charges, bank charges, all right, that have been deducted per the bank statement that you haven't recorded on your book. Determine if there's any book or bank errors. Now remember, errors can go both ways. You can make an error on your books, or the bank could have made an error. You got to look at who made the error. Remember that. Who made the error? And then you adjust accordingly. Determine the adjusted bank balance and the adjusted book balance. Make sure they're in agreement. And then prepare adjusting entries for who? The books. You do not need adjusting entry on the bank statement because the books would have already recorded it. You do need adjusting entries on anything that you made changes to on the books based on what was on the bank statement. More to come, an example to follow.